Electronic Marts India, that stock is up, 9.5% in trade on the back of numbers. We have with us Mr. Premchand Devirakonda, who is the CFO at Electronic Marts India, joining us. This was a very strong quarter for you, in fact, 34%, sir, in terms of same-store sales growth. How much of this was driven by a favorable base, seasonality, and how confident are you of this momentum likely to kind of sustain for the rest of the year? Just give us a sense.
This Q1, like when you compare with the Q1 of the last year, so last year Q1 was the worst quarter. So in my opinion, we should not compare this Q1 to the last year's Q1. We have to rather compare it to the Q1 of the FY25. So even then, this is an outstanding performance in the history of our company. So that was mainly driven by the demand for the air conditioners and also other cooling products. Surprisingly, after 4-5 quarters, we witnessed double-digit growth across all the categories. That has really contributed significantly in this quarter.
Right, and what about your margins? Because they too have seen a sharp expansion, better product mix, operating leverage. As we head into the festive period, would it be fair to assume that margins will only see more expansion?
See, the product mix in Q1 normally will be better compared to the rest of the quarters. The reason being the summer season sales. So that is that scenario will not be same throughout the year. So in the future quarters, in the next 3-4 quarters, I think we may not expect similar rate of margins. So, but for the year, it will be much better than the last year.
And which categories contributed the most to the margin improvement that you've seen? Are consumers increasingly trading up to premium products? Is that what you're seeing as a trend?
See, there was definitely decent traction for the large screen televisions. So, which was previously that was one of the growing categories. But this time, actually, even the large screen televisions contributed significantly. And the second thing is the air conditioners. So air conditioners is the highest gross margin product, and it was performing very well. Even in the second quarter, first month. So there was decent contribution coming in from air conditioner category. And the third one is the washing machines and refrigerators. And both these categories did very well. So these, on the whole, like across the board, all categories have shown decent double-digit growth. That is one of the reasons why we had decent gross margins as well as the EBITDA margins in Q1.
Right, and you're preparing to enter West Bengal as well while continuing to expand in your core markets too. Basis your earlier guidance, are you still on track to launch 5 to 7 stores in Kolkata by Q3?
See, in the month of, somewhere around Diwali, we are going to launch the first set of stores in Kolkata. So the number will be around 5. And by end of this financial year, we are planning to add 5 more stores. Probably in the fourth quarter, we'll be adding those 5 stores. And apart from that, we will be adding at least 15 stores in the other clusters like North Cluster and the South Cluster.
And your North Cluster, in fact, is expected to improve this year as well. How has the market evolved over the last few quarters, and when do you expect it to become comparable to your more mature southern markets? Are you still on track for a 3 to 4% EBITDA margin in the NCR by year end?
We are targeting to achieve that 3 to 3.5% EBITDA margins from NCR, and it will take another 18 months, I think we need to reach to the maturity level in NCR region. And hopefully, I think if the next summer also is also favorable, definitely in the next financial year, and we are going to have decent, at PAT level, it will be positive in NCR.
Right, and large appliances, they continue to contribute nearly half to your revenues. Which product categories are seeing the strongest momentum today, and where is it that you see the biggest growth opportunity?
Growth is there across, like, as I mentioned earlier, so the penetration of the air conditioner is very low in this country. And also now there is a lot of scope for upgrading the televisions. So that is another category. And especially we opened more than 100 stores in the last couple of years. Those stores were located in the tier 2, tier 3 cities. So where the market for these products is increasing over a period. And on top of it, the NBFC penetration is also improving in those regions. So all these are contributing to I mean, this is giving quite optimistic view about this market.
And with the festive season around the corner, how are inventory levels and demand trends looking?
Inventories have come down drastically compared to the last, 31st March figure. And that has reflected in the operating cash flows because we could liquidate a lot of inventories which we carried throughout the last year because of the bad summer season. For example, air conditioners and coolers. So all those inventories could be liquidated, and this really, I mean, as of now, we have the normalized inventory in our books.
Right, and what's the outlook for the full year though? Are you on track to achieve the full year guidance?
See, initially we thought of, we projected the top line growth at 15%. So at the start of the financial year. But now we are revising that estimate. It will improve to 18% minimum. And it may, if everything goes well, that means if festive season goes well and the next year summer starts early, we are expecting the top line growth of 20%, and that is quite encouraging for us. And also, if the product mix maintained, like what is happening, like even the categories like IT, laptops, mainly laptops and tabs. So they are also contributing decent gross margin compared to earlier years. If the trend continues, this year EBITDA will be better than earlier years. That means it might cross 7%.
Right, Ms. Devirakonda, great to have you today on ET Now. Thank you so much for your time.